Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your weekend edition. An exciting trading week out there. In studio, as you can see, I'm not alone today. We have the Ambassador of Opportunity, John O'Donnell, with us. John, thanks for joining us here in the studio. Appreciate it.
Glad to be here, Merlin. How's it going?
Great. Some exciting stuff happening out there. Some good moves in the markets, and all in all, I'm doing pretty darn good. How about you?
I'm doing great.
Anything new in your world?
Well, yeah, I got a couple of classes this week. We had we had 3 classes in session this week, and the response
in Irvine,
and I had the opportunity to mix and mingle, give a couple of talks at our classes, and the feedback, the engagement of our community of users is just kind of heartwarming, and I'm proud to be affiliated with this organization.
Nice.
At any rate, that was my primary.
All right, mine's the same old thing. Working on actually doing Strategic Investor on Demand, which is it would take a little bit longer than we thought because we're creating some great graphics and visuals for that. But that's my day-to-day out there. A lot of stuff going on in our financial markets out there. Hopefully, some of you had some nice gains this week. Before we dive into maybe market specifics, I wanted to get your take on Morgan Stanley. Obviously, we know that they profited immensely under the Trump tax cuts, et cetera. That's not the topic of discussion. The topic of discussion is their deal with E-Trade for $13 billion worth of stock. Sign of the times, writing on the wall, or just a bold move by Morgan Stanley?
No, I think it's just further consolidation of the industry, and especially for a big firm like Morgan Stanley to go into this segment of the marketplace. You know, you and I were part of the industry going back to the late 90s, and when the whole consolidation wave really started with the online brokerage space. Yep. But now, you know, we're seeing it with the money managers. We're seeing it with the asset managers. We've seen it with the banks, and now we're seeing the bulge firms like Morgan Stanley. You know, allegedly Goldman Sachs was also a candidate to buy E-Trade, and they're trying to move into serving the retail customer. They've got a new banking division. Mm-hmm. So I think it's just ongoing consolidation of the space. And look, the big brands are getting amalgamated. You know, the E-Trade brand will probably not go away because I think the E-Trade brand is pretty well known by the community they serve.
Yeah, I mean, it's one of the main names out there. Chart of E-Trade, someone asked about the chart of E-Trade. There you go. You can see yesterday on that announcement with Morgan Stanley, it jumped up to above $57. It was trading at about $45, so it's a heck of a move up there for E-Trade. Giving back a little bit of those gains today, you can see it was predominantly down. You know, how far will it go? I don't think it'll close that gap by any means, but certainly might have been a little bit of an overreaction by the markets. We can look at Morgan Stanley if you like as well, since someone asked about E-Trade. Let's be fair and bring up Morgan Stanley, who took a hit on the news. And it's interesting that we brought these up because this is normally what happens when a company acquires another company. The company that does the acquiring, they usually take a hit in their share price, which is what we saw here with Morgan Stanley. And the one that is acquired usually vaults, and that's what we saw with E-Trade. That's normal. Yeah,
they paid a premium for them. And since it was a stock-for-stock deal, I believe it's going to dilute the total outstanding shares of Morgan Stanley. Last number I saw was approximately 12%.
A good comment here from Brendan. By the way, a shout out to all our viewers on Power Trading Radios or all our different YouTube channels. Hello, Gretchen. We got Gretchen, Big Eb, Brendan, Jorge, who's driving right now. Make sure you stare at the road, not at your screen there, Jorge. Why don't you crash? And we also got Greg. Welcome from Atlanta. All right. Actually, speaking of Atlanta, I'm going to have Steve Champ on the program here in a couple weeks. Pretty excited about that. Jason Ma and Trent, welcome back. That's on Power Trading Radio's YouTube channel. And then Dana, Tuan, and Gayer on the Trading Academy YouTube channel. Hello, everybody, and feel free to send in questions that you have for John or myself. It is a free-form show today. We love listener questions, and that's how we'll steer today's show. We were talking about the purchase of E-Trade by Morgan Stanley, which, of course, I agree with John, is just that further consolidation of the industry. Brendan made an interesting comment saying maybe it has to do with them wanting to set up crypto exchanges. I think that is going to start to play a little bit of a bigger role in our markets, is the integration of crypto trading desks at some of these major firms. So, of course, for those that already have a crypto footprint out there, there will be nice targets. You see Coinbase has actually been making some pretty big waves in that area as well. Let's see. What do I want to get to? I'm going to start off with a very basic, vague question that came in from Brent. Brent says, I was curious what your advice on trading during this election year would be. I'm not too active, 1 to 2 trades a week. What should investors do?
Wow.
That's an open-ended one, Brent. Thank you for the question.
Well, I would first of all kind of emotionally, I'd kind of buckle my seatbelt. I think this is going to be a pretty nasty election, and I think there's going to be barbs thrown by both sides back and forth, regardless of who the Democrat nominee is. And those, and then our Twitter in chief is going to have something to say probably every.
Oh no, John, he'll stay silent. He's not going to
every other day. So it's a long time between now and November, and I would just be very, very prepared to experience some volatility in the capital markets. Now, what may override all of this is what's going on in Japan, of course, what's going on in China. China is the job shop to the world. This coronavirus situation has not been ring-fenced. We've been talking now, a few weeks about it, and it just every day the numbers seem to climb.
But how do you? I got to stop you right there. So how do you know? Right, we live in an era of unbelievably deceptive misinformation. So I don't know the numbers that are coming from China. Well, and then the U.S. gets numbers. Who knows what their numbers are right or wrong?
To your point, but as a matter of fact, if I were going to bet, I would bet the under. I would bet that the numbers are much worse than what China is willing to put forward to the world press and to their people. Remember, this is a totalitarian regime. And they want to keep the people under their thumb. So if anything, if the numbers they have reported and the growth rate using the numbers that they have reported, I think we're well up over 65,000 cases.
Oh, it is? I'm not even really following.
Yeah, well, here's my point. It's probably worse than what they're reporting, not better. So can we trust the numbers? Of course not. The numbers are probably Can we trust our politicians not to politicize numbers every once in a while, Merlin?
Every once in a while, that's their job.
Come on, what are you talking about?
All right, Brent, my take is twofold, and I think you actually approach it from two different perspectives. You say I'm not too active, 1 to 2 trades a week. I actually do believe that the industry would call that an active trader. And then you say, what should investors do? From an investor's perspective, I think you have to be very defensive out here. I would agree with John 100%. I think you're going to see tremendous volatility this election year. I think at the end of the year, when all the dust settles, we'll probably see a market that's pretty close to flat at the end of the year results from January 1st to December 31st. However, we've already seen some monstrous moves to the upside. I think you'll probably see some monstrous moves to the downside. I actually ran a Twitter poll a while back, which I don't even know what the results of that one were. There was... Let's see if I can bring that one up for you guys. I ran a Twitter poll which basically asked you guys the question. Let's see, there it is. Oh, how quick we could bring that one up. That was, will we see a 4-digit down day in the Dow this year? 51% said yes, 31% said no, and the real answer is the 17% said, I just don't really care. I think what you'll get is I think I'm in the camp that says you will get a 4-digit down day, meaning at least 1,000 points down in the Dow this year. That's par for the course. I think once you start to see who is nominated as the presidential candidates for the Democratic Party, you'll probably see these markets take a big nosedive. That's just my guess. But it ultimately will just balance out. I think as an investor, you have to kind of ride out those waves. I would diversify my portfolio into non-correlated assets or potentially even go into cash so I don't have to have the heartburn and pull my hair out over those. The other part here is for the active traders. This is nirvana. You want this type of thing. So for those of you who are short term, you have great intraday moves. You might have one day that's so unbelievably bullish you think we're going to just go to the moon, and the next day is incredibly bearish. This is a short-term trader's paradise in this year where a tweet, an announcement, any sort of little factoid out there can create havoc in the market. So I think it's going to be an exciting year.
I do too, and I think if I were this individual, I would certainly keep my finger on the pulse of the bond market. The 10-year Treasury yield today hit 1.4 and change, and we haven't seen that print in a long time. And it looks like, again, it's a flight to safety trade. Gold probably was right up there with it. Mm-hmm. In the meantime, as you and I talked before the show started, the dollar's getting hammered. So
just today. Just today.
Just today.
Let's end on that note. I want to take a quick break because I see a lot of you guys talking about gold out here. So I want to talk more about gold because obviously that is one of the things we've been focusing on in the program, especially from the breakout perspective and seeing that nice move that happened today. It was your best performer. Gold finally took the gold medal spot. The podium up 1.57%, $25 plus per ounce of gold to the north side to $16.45. When we come back, we'll take a look at the gold chart, also look at that maybe in comparison with the dollar, also maybe crude oil, and whatever else you guys would like us to analyze. So feel free to send your questions in at powertradingradio.com by clicking Power Blast, or join the discussions going on YouTube. We've got Power Trading Radio as well as Online Trading Academy's YouTube channel. Send in your questions. We'll be right back with John O'Donnell after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
It's just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome to Power Trading Radio, or back to Power Trading Radio. It's your weekend edition. My name is Merlin Rothfeld. We have the Ambassador of Opportunity, John O'Donnell. We had a great question come in from Dana at Online Trading Academy's YouTube channel, and she says, my question is, what does a virus have to do with the market as a whole? As a company's business that has nothing to do with biotech, yet the company's stock drops.
Well, it has to do with overall confidence. You know, China has accrued the position of being the world's job shop. They've spent decades building all this infrastructure to make the goods and services efficiently that the world consumes. So many of these people, many of these factories haven't reopened, or they've opened up with, you know, a half or a quarter of their production historic output. So it breeds uncertainty. You know, uncertainty is one of the pillars of VUCA: volatility, uncertainty, complexity, ambiguity. So uncertainty, the markets don't like uncertainty, and they're going to fluctuate wildly. And there are going to be some participants that are going on the wrong side of that fluctuation, some on the right side. But I think it has everything to do with confidence. The World Health Organization is now taking this on. Now, I'm not trying to be a fearmonger and telling everybody that this coronavirus is going to be like the Spanish flu virus,
the Black Plague,
which arguably killed 90 million people in 1918. But this risk has not been ring-fenced. I mean, I'll give you an example. Look at the cruise industry. You got complete cruise boats that it can't even come to port.
I'm jumping off that boat. Yeah, you can't get off because there's a deadly virus on it. I'm swimming.
You know,
I'm taking my chances.
And quarterly reservations for the next cruise, you know, have dropped 80% in some particular cases. I mean, it's uncertainty is what this corona thing builds.
Right.
Now, if the global production, remember when we had Mark Skousen on talking about the most important part of the economy is not the consumption side of the economy, it's the production side of the economy. And so this is a very big deal.
I think for me, and let me make sure I give props out there where props are due. For Dana, you know, for me, it has to do with the uncertainty that John mentioned, but it also has to do with forecasting the future. So, for example, if we know that this coronavirus, or make the assumption, let's not say no, we don't know factually, but let's make the assumption that it's going to impact China's economy. I think that's pretty much certain. The extent to which we do not know. So I think that there's some disruption priced in already in our U.S. equity markets, although I personally believe that we've shrugged it off if you look at the way these indexes have been moving, primarily because we have Microsoft, Tesla, NVIDIA, Amazon, Google all soaring. The other companies in these indexes are really not performing that well. Yes, there are some, but as a whole, most of these companies are kind of flat, if underperforming right now. Why is that? Because the expectation is that this coronavirus, or this issue, is not done. It's not ring-fenced in, as John pointed out, and it could potentially get worse. And if it does get worse, what would it do for exports for the U.S. to China? Because now we might not be shipping there because the boats will get contaminated, and all the goods and services coming from China might not go to arrive at our ports either. So that disruption is going to start to impact earnings for companies. If it disrupts earnings for companies, then the forecast for the future is down market, and that's part of the reason you're seeing these stocks drop.
Yeah, and remember, the markets are pretty efficient about pricing that risk in the future. They're not 100%, but they do a pretty darn good job of sniffing out these risks and pricing them accordingly. You know, it's estimated that Tesla's going to sell more Teslas in China than the United States. Okay, they very well are going to be producing more Teslas in China than the United States. You don't think that's disruptive to Tesla, but yet everybody believes that. Look what happened to the price of Tesla today, by the way.
Not much. Tesla was actually okay
well,
today.
It's had a heck of a run this quarter.
Medic Mandown on the Trading Academy's YouTube page says there are conventions around the world that are canceling events because of the virus.
Oh, all over the place. All over, including Vegas. I mean, the electronics industry is a big. San Francisco is a big, for Silicon Valley is a big. All those things most of them are being dramatically impacted. No question about it. So, no, it's coronavirus is part of the story of risk.
Yep, it's risk, but the major thing is uncertainty. And you probably heard my cynicism. I don't trust economic data. I don't trust reports that come from our government or other institutions, especially any news that comes from China. So, you know, I agree with John. There probably are far more cases of people dying from this virus or sick from this virus than we are hearing. Of course, our media will add its own little spin on there, but bottom line is it is a disruptor. And when you look at it's one of the major trade partners for the world is China, this all of a sudden could be a global disruptor. So it's not just the U.S., right? This could be something that impacts other trade partners. Well, Australia obviously does a lot of business with China, so that could impact Australia as well.
Think of the supply chain to companies like Dell, Apple.
Yeah.
Goodness gracious. I mean, you know, this can get much more extreme, and I think we just all need to be very cautious about it.
You know, we were listening to a presentation this morning, and, you know, one of the topics that came up was, you know, one of the individual had a friend in Singapore, and his job was to repair printers. Well, now he can't get the parts from China. So this guy's business, which you think would be unaffected, is all of a sudden at a standstill. He can't even go out and repair those printers. So you can see how this has a domino effect. And you know, maybe the chemicals you're talking about in this pharmaceutical company are not made in China or have any real direct connection. It's the systemic uncertainty that's causing that to maybe have sympathetic sell-off.
Well, Jim Cramer on CNBC this morning.
Could you? I prefer if you don't swear on the show, John.
I won't swear.
Yeah. His name is a curse word.
I happened to catch a glimpse with an interview he did with Larry Kudlow, and he asked Larry Kudlow to bring to the president's attention that pharmaceutical companies, a vast amount of patent medicines from American-based pharmaceutical companies are actually manufactured in China. And there is threatened shortage of these manufactured pharmaceuticals coming back into the United States. Within weeks, there could be a real problem here. And Cramer was very passionate about this, and I'm sure if you go to CNBC's website, you could probably see the interview where he interviewed Larry Kudlow this morning, bright and early Pacific time. So why, and he begs a very important question, why is it that the pharmaceutical companies in America with patent medicines need to have the pharmaceutical production of the little pills done in China. This is, you want to talk about a medical issue, a national security issue. Maybe we need to manufacture all those drugs in the United States, pay more for them. They'll be more expensive, okay? But
you don't want to come back as cyanide pills, is that what you're saying?
I don't know what they're going to come back, but if you know those factories that are making these pills, apparently there's a real potential supply chain interruption. So,
yeah.
But it begs a very good question: what is the security issue? And by the way, most of these pills are made mechanically anyway. Sure. It's not like a bunch of people. You know, my dad used to be a
never know. I don't want to see some guy with a mask on packing up my capsules.
I grew up a pharmacist's son. I did a lot of that, packing of those little pills with powder. But
that explains a lot, John. Explains a lot.
What are you going to do?
He was the most popular kid in school, I'll tell you that. Brendan, you said, where was it? There was something interesting you mentioned. Of course, you mentioned a lot of interesting things. To talk about that supply chain disruption, this is an interesting one. Do you think that the cannabis industry would be impacted by this coronavirus, et cetera, blah, blah, blah? And you're thinking, well, no, it's growing weed. Who cares? Well, you're right. He says we're having a hard time getting vape pen battery units. And a lot of that supply chain is having an impact on the cannabis sector because almost everything, all those little cartridges, all the pens, all the batteries, I would say the vast majority of that is manufactured in China. Yeah. So now you're seeing disruption. And
again, they are the supply. They are the the job shop to the world. So it's going to touch thousands and tens of thousands of products. So.
Yeah, it's good. All right, I didn't mean to go down that path. I know some of you are getting all excited, want to know more about the gold charts we were talking about. So GJ, bring up GC. We're on a futures chart. Yeah, bring up our gold futures here. That's Tesla. I want GC. There's gold. All right, so we've been talking about this one. Again, I don't want to rehash or repeat, but we were talking about this. Some viewers asked about this being an ascending triangle, which is, of course, a very bullish pattern. I didn't believe it was a full-on ascending triangle, but I did see the strength here. We were talking about a break above this little purple line, which is right around 1613, and said you get a close above that, that's a very, very positive sign. We saw it rip today. We saw a great move up in gold today. It was $25 per ounce. I know some of you have been on this program for a while. Brendan and others, including myself, think 1,700 would be a very logical and easy target to hit. Big Eb just joined in there a second ago, and he goes, look, you might see it happen this week. I mean, it's moving that fast. Well, the week's done, but we could certainly see it by the end of the month if this momentum continues and more uncertainty pops into the equation. John, I'd like to get your take on it. I'm going to map out 1,700 here, which has been our target. You guys can see it doesn't look like it's that far away anymore after today's candle. There's your blue line on the top there is 1,700. Pretty darn close. What's your thoughts on gold?
I think it's very highly probable. I don't think there's any question, especially as this dollar continues to weaken. What is it about the weakness of the U.S. dollar that was impacted by the coronavirus as well? Or was there any real correlation between what's going on in China and the value of the U.S. dollar? So,
well, we had the Dixie up there. TJ will bring that back up for everybody. This has been one for me that is just kind of jaw-dropping how quick and how fast this dollar index has been moving. Today we saw a really sharp fall in the dollar index. You guys see this big red candle here. I can probably get you a percentage on that one if you would like. I know some of the viewers always like when I give percentage quotes. So TJ, if you wouldn't mind, go from yesterday's close on that bad boy to where we closed at today. Dollar index, you're looking at down about, what number is that? 0.5%. Which may not seem like a lot. You guys think 5, 6, 10% is a lot. Well, 0.5% for a currency, that's a lot. Today was a very, very big move in the U.S. dollar, and I think this is part of the reason we saw gold take off today. Gold just got a lot cheaper for people. You think 1,700 is out of line? You think we could go even higher?
Oh, sure we could. Possibility. I think it's all going to be related to the public and hedge funds feeling about the probability of a recession. Europe's very weak. Japan's very weak. We got sectors in our country that are struggling. What is the probability of a recession? What is the probability of people taking risk off the table, going to the flight to safety trades? We saw it in gold today, and we saw it in the 10-year Treasury bond. I think the 30-year bond hit an all-time low today in yield.
Yeah.
And so something's going on.
I'll bring up I don't have the 30-year on here, but I do have the 10-year, so I'll bring that one up, which is the 10-year yield, guy, by the way, guys, dropped below 1.5 today, that's huge. Here is a couple very interesting things happen. This is a weekly time frame here. I'm going to leave these lines and have TJ go back to the daily just so you can see the perspective. this is one of those things when things do what you think is going to happen, it always makes you feel good about your forecasting. But you guys remember we talked about this being a bullish pennant formation. There's a big pull. You have the consolidation. It said generally when this breaks out, it's going to be to the direction of the prevailing trend, which was up. Not only did that happen, but we ripped up today, guys, to an area of supply that it had been tapping twice. We actually went through it, closing today on that 10-year right at that area of supply. Something to pay attention to. This is the 10-year U.S. Treasury futures note, which, of course, when the yields drop, this will rise even more. I think what it means is you're basically forecasting lower and lower yields for that 10-year. Again, 1.47. That is a pretty significant low. It's down 3.5% today.
Yep.
I don't know. I'm not in the camp yet of saying, hey, we're going negative. But as we continue to drop, and below 1.5 is obviously a historically very, very low level. What are your thoughts on where we're headed with the 10-year?
With negative yields?
Do you think we're going negative?
No.
No?
What is the chance of that?
Yeah.
I think that chance is, well...
so you're saying there's a chance?
Yeah, there's always a chance, but I wouldn't be shocked and surprised anymore, given what's going on in Japan and what's going on in Europe. But what's the probability of us going negative in what time frame? This year? This year? Next year?
Add your thoughts on it. I'm just throwing it out there.
Well,
it's crazy because
I'll tell you one thing we need to think about on that particular issue.
And there it is, guys. I know we brought it up for you. I was waiting for TJ to bring that up.
Yeah,
Thank you, TJ. This is just showing you historically where we have been. We are nearing historic lows. 2016, we were at what 1.37, I believe.
Yeah.
Let me see if I can get the exact number here, just to make sure my numbers are right. 1.33. Was the open there, the low is 1.336. And we're at 1.47 right now. So this is great for home buyers, but...
Well, sure. But it's also sending a message to investors that have a bullish bias. Look, Mr. Trump, if he's reelected, you think he's been aggressive about, bullying the Fed for lower rates? Mr. Trump has said numerous times, that our Fed doesn't know what they're doing. There are interest rates across the world where they will give you money to borrow, and we need to become more competitive. Well, spoken like a true historic real estate developer can do. But the point is, how aggressive could this get? Who's to say? If you would have told me, you and I years ago, we were doing this show. How many years now, Merlin?
On April 5th, it will be 10 years.
Okay, 10 years. It's near my birthday, isn't it amazing? Okay, for 10 years, you and I we did not have on our radar negative government, $15 trillion of negative yielding sovereign bonds in the world today.
All the way through my collegiate career studying finance and investments and business, I had never heard of a negative yield.
No.
So it's one of those things when you hear it, you're kind of like, I'm sorry, could you say that again? Negative yields. So you want me to pay to have someone borrow my money? That doesn't make any sense to me whatsoever. But here we are.
So here's where we are. Is it a possibility? Anything's a possibility in this crazy world we live in today. More VUCA, Merlin. More VUCA.
Yeah, I personally don't see it happening for the U.S. It's one of those keep up with the Joneses type of things. We haven't seen any sort of systemic failure from those countries that have been using negative interest rates. But I think that by keeping our rates a little bit higher than other parts of the world and maybe being positive, that means more inflow of capital into those markets, meaning our markets. Therefore, we might see more capital come in and continue to drive our markets to the upside. It's my
possibility.
All right, let's see. Mohammed says, this is aligning for a crypto boom. Interesting that you say that. So I'm going to get John's thoughts on this one. John's not the crypto expert, but you do have thoughts on the industry. If we have an issue where, obviously, coronavirus, I don't think it's the Spanish flu like before or the Black Plague or anything like that, but it could create disruption. We have a bubble on many fronts. I know some of you would disagree with that, but we can agree to disagree. I think we have a bond market bubble. I think we have a housing market bubble. I think we have an equity market bubble.
I think we have a chart on that too, don't we?
We do?
Yeah. Remember the disruptors bubble?
Oh, is that what we're going on to? So TJ had it all set up there. When you have this sort of thing where you have all of these factors at once coming to a head, that flight to a secure, not necessarily security, but a flight to something that's not going to be manipulated, like Bitcoin, and some of these other cryptos are manipulated, by the way, guys, but Bitcoin probably the bellwether of them. What do you think that does to that industry? Would Mohammed be out of line here thinking that this is aligning for a crypto boom, as assets might run to something that's safer and not as manipulated by these types of environments?
Well, I'm an advocate of, with the likes of Ron Paul and others, that the government, any government, should not have a monopoly on issuing the monetary unit. That there is, especially in the United States, there is space for competition in the creation of a currency unit. It doesn't have to be a central bank system. So could it happen? Sure. I mean, look at the power that crypto has done for some of these countries that have totally corrupt monetary systems in Africa and South America. Crypto has facilitated trade, exchange, and it has a place that it carved out for itself because of the corrupt monetary authorities in those countries. That's my 2 cents, but by no stretch of the imagination does that mean I'm wildly bullish on cryptos.
Yeah.
I have no position. I would tread there very cautious. You might want to mention that course you put together on OT Academy.
Yeah, I am optimistic, and like I've said many times, as you enter any new asset class or as a new asset class comes to life, there's fraudulent companies out there, there's shysters in that space, there are cryptocurrencies that are just there to collect a quick buck and they'll disappear. So you really have to do your due diligence. I am optimistic for the industry. I do hold some significant holdings in about 15 different cryptocurrencies right now that I feel have prospects, and some of those might not do anything, others might actually do very, very well. So if you would like to know more about cryptocurrencies, really more how they function, how they work. I know Big Ed was saying, I don't know much about cryptos, but I want to. I would really encourage you to check out this course that I built. It's, I think I built it 2 years ago, but still very relevant. Go to otacademy.com. You log in there and you just click on the materials, click on cryptocurrencies, and there you will have it. It'll be real easy for you to check it out and learn more and more about it. Oh, well, thank you, Brendan. I appreciate that. Since I'm a great crypto educator, I'm fascinated by it. I think that's the main thing, is I'm absolutely fascinated by the industry and what it might be as a disruptor for not only investments, but also infrastructure, technology, businesses around the world think could be impacted by different cryptocurrencies and blockchain.
If it facilitates voluntary exchange, I'm all for it. And I hope it has the opportunity to become wildly successful. And assuming it provides the utility that producers and consumers want, and transparency, etc. It has, some of them are going to have probably the opportunity to get traction and give competition to the fiat system that is dominant across the world. What I think could really accelerate that shift would be that there would be a loss of confidence in the fiat currency system. There would be some kind of a black swan event that would cause alternatives to emerge. And remember, Bitcoin emerged in 2009?
12.
Okay.
Oh, sorry, no, 2009, yes.
2009, right at the start of one of the first bear markets we've had in a long time.
Right.
So.
And it didn't do too well. It took a long time to gain traction. All right, let me go to this question. Jim Kelly says, do you see a pullback to buy in? I'm not sure which ones you're referencing there. I'm assuming you're talking about gold. You look at this gold chart here that TJ has up. The simple answer there is generally what you get with a break of a supply level is a return and a retest. So that level right around 1613 we mentioned, that might be a nice buy-in point. It's dangerous here because it has moved so far so fast. I mean, it's really been an aggressive move since February 6th to the north side here on gold. So I would be looking at that 1613 mark. Of course, if you are using options, you could be using options right now to collect premium. And if it does drop back down that level, you could get well, I'm probably using GLD, but get the ETF for gold assigned to you. And if it continues to rally and you don't get on board, well, you're still collecting premium. But that's, again, using the options as an asset class. So a lot of different ways we can trade that one, Jim. I think that's what you're referring to was the gold. And I would say the same thing for any market, really. You're basically looking for a quality, if you're looking for a buy point, you're looking for a quality demand zone to buy into. Right now on gold, you're probably looking at 1613. Plans for the weekend, John? You going to do any teaching this weekend?
Yeah, as a matter of fact, I'm going to be doing a power trading workshop in Long Beach.
LBC?
I'm looking forward to it, and it's a beautiful community up there.
Yeah.
And it starts at about 10 a.m., and I'm looking forward to it.
I will be coaching the Online Trading Academy softball team.
Whoa.
Yeah, we need batting practice badly. We'll be doing some batting practice on Saturday.
Is that the clicksters?
The click hitters.
Oh, the click. Oh, I like that.
Click hitters, yes.
I like click hitters better.
Yeah, so that's my weekend out there. Again, guys, if you'd like to know more information or see John in action, he mentioned he'll be in Long Beach this weekend. You can find out more information by going to powertradingradio.com. You simply click on the little link there that says free class. There's two buttons actually on the page that say free class. If you click on that one, you type in your zip code. That'll tell you which of our physical brick and mortar campuses are nearest you. Again, there are 48 of them around the world, but there are also online classes, self-paced content, and really a bunch of resources there to help you achieve whatever goals you are trying to achieve through education and understanding of how these markets function. If you'd like to know more, again, click that link at powertradingradio.com. John mentioned he'll be in Long Beach. I will be doing batting practice with my softball team, so unfortunately I won't be much use to you, but I will be back in the saddle on Monday.
Click hitters sounds like an oxymoron to me.
Click hitters? It does?
Mm-hmm. What's the team batting average?
Don't even go there, John. That's why do you think we're practicing batting practice on Saturday?
That's why it's an oxymoron.
All right. Click lack of hitters. All right. That said, thank you guys for the participation today. There's Medic Mandown saying cryptocurrency is the Wild West. Please be very careful. Absolutely. It's probably one of the most risky asset classes out there. As I mentioned 2 years ago when I built that class, I said I think 90% of them will disappear and go bankrupt and just disappear. I still stand by that. I still think the majority of them are going to disappear. Thoughts on Ripple? I was really big on Ripple about 2 years ago. I'm becoming less and less confident in it as I think the Fed is going to do their own coin, and I think you have a Fed-sponsored settlement coin created that will use technology similar to Ripple, but it'll be their own, so they don't have to pay for Ripple and give away the power to the Ripple organization. So that's
what about that Facebook coin?
Libra coin? Not going to happen.
Not going to happen?
Maybe down the road you'll see something happen like that, but it's competition to the U.S. dollar, plus who now gets to track all the transactions. It's that Facebook consortium, not the government. They're not going to go for it, so not going to happen. All right, let's see. Go click hitters. Thanks, Gretchen. Yeah, hopefully we will do well in this upcoming season. Let's go to your economic calendar for Monday, February 24th. As you guys can see here, not a lot happening for the U.S. We've got German IFO business climate as well as German final GDP for the euro. Canada has wholesale sales, and then SPPI numbers coming out for Japan. Moving on to your earnings calendar for Monday, February 24th. Intuit, HP, OneOK. I guess that's OneOK. That's how I'm going to pronounce it. Palo Alto Networks, Keysight Technologies, and then Guardant Health. It should be like Guardian Health, but it's Guardant Health, apparently. GH. Guest for the show on Monday will be Scott Greer. We're going to be talking currencies. We actually have a double dip next week of currencies on Monday and Tuesday. So there you go. You've got Scott Greer joining us for the program. If you have any currency-related questions, because I feel it's been a while since we've done a currency show, feel free to send those on in at powertradingradio.com along with any questions you guys might have so I can get them all prepped for our guests for any show next week or any upcoming show. You can just click that Power Blast button to send those questions to us. You can always click that free class button at powertradingradio.com to learn more. And of course, if you liked the show, click the little thumbs up button on our YouTube channels. Leave a comment down below. Hopefully you guys will have a fantastic weekend, and we will see you next week on Power Trading Radio. Take care, everyone.
Peace.
We're out of here.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.